Thank you, Javier, and good afternoon, everybody. Thank you for joining us on another incredible episode of Resolve It in 30, where you bring the questions and we bring the answers. Today, I have to tell you, I'm really excited about the presentation that we're going to be having from not only important and critical members, but also sponsors of the Chamber, and that would be the Customers Bank. With us from Customers Bank are the Vice President, Miguel Alban, and the Senior Director, Denise Payne. The subject today is one that's really critical. It's about getting loan ready and what lenders are looking for when you need a loan. You can see that's me, Karen O'Connell, and also flying the plane with me is our program coordinator, Jael Thatcher. In this next 30 minutes, what we're going to do is be able to talk about getting loan ready, and that's really, really critical for businesses. We'll be able to talk for about 15 or 20 minutes. If there's any questions, put them in the chat box and you'll see that direction in a second. And then we will be able to answer those live as well. For all of those folks who will not be able to be on the conference today, we will be posting this on our website in our technical assistance area by Monday or Tuesday of next week. So the content will be available for everyone. And we're also very thrilled to have our sponsor, La Mega Radio, okay, as one of our major sponsors of the Resolve It in 30. They are the #1 Hispanic station in Philadelphia, and they are willing to advertise, to customize advertising for our members. So you just simply give them a call. I'd like to introduce at this point the two people who are going to be running this program today, Miguel Alban and Denise Payne from Customers Bank. Miguel and Denise, please take it away.
Sure. Thank you very much, everyone. Thank you for joining us. We are a proud supporter, as you mentioned, Karen, of the Hispanic Chamber. We're happy to support small local businesses. We're going to run through this presentation really quick. We don't want to overwhelm you with a lot of fancy terms or words. We want to make it easy for the audience. Denise is a superstar. She belongs to the Multicultural team. She's a lender in the Philadelphia area. She's been around for a little while. She's a very experienced banker. And she's going to start with the presentation. She's going to introduce herself. And then after that, I will talk a little bit about the presentation as well. Denise?
Good afternoon, and thank you, everyone. Yes, my name is Denise Payne, and I am with Customers Bank, the Vice President of Customers Bank. I'm going to go over the presentation really quickly, and hopefully you'll get a lot out of this as your takeaway. Thank you. Preparing for a loan. The level of success is obtaining financials is measured in how well you prepare for the future. So basically what we want you to do is the first thing is save your tax returns. Do not have them all over the place. Put them in one file because most of the lenders, we're going to ask you for those tax returns and we're going to need them right away. So just make sure you know where they are and save them so they are at your fingertips. Next. Being fully prepared is key. Seek a lender that's familiar with your industry. Be thoroughly prepared, be confident, and anticipate every question. Take notes. So when you're sitting with someone, take notes so that you can find out if this lender fits your business. And be confident in anticipating every question because the lender is trying to get to know you and trying to know your business so that they can fit you in the right product. Next. Don't be afraid to ask for a loan. Sometimes we feel as though we don't qualify, so we won't even ask for a loan. But you never know, you may qualify more than you think, especially if you're a startup. So find out if this lender participates in government programs such as SBA. Find out, if this lender does lend to small businesses. And we know during the COVID times, maybe some lenders may be able to, maybe some lenders may not, but that's a great question to see if they're doing that. Next, be thoroughly prepared. Review the application, don't miss anything. If you don't understand something, just raise your hand, but please do not skip over anything because we will need to know everything there is about your business. And provide insight on anticipated income such as expenses. If you have insurance, tax, your suppliers, let us know what you have. Test your projections against your current financials as well. and are they realistic? So you may need $100,000, but you may want $300,000. So be realistic and provide a cover letter. So we would need to know what is there about your business that you want us to know. So give us all the information and what your wants and your needs are. Next, be confident in anticipating questions. Provide details on the use of the funds. What do you need it for? Have a business plan. So does your cash flow provide a repayment time frame? So if you're approved today, 1 month from today, you will need to make your first payment. So make sure you do include that in your projections. Don't stretch the truth and don't be negative, because sometimes we will ask you questions and it may feel like you don't want to answer, but just try to be open about it, because we're trying to get to know your business. Next, gather your information. If your business is a startup or less than 2 years old, have solid business plans and projections, interim financial statements, 3 years personal tax returns, and a personal financial statement. Next, gather your information. For a business with 2 years or more of operation, have a business plan, 3 years of tax returns and business returns, interim financial statements, pro forma statements on how the new funds will impact your business. Next, what lenders are looking for: a well thought out loan application, clear and concise. Try to print on your application or type it. It would be great if it's typed and neat and legible and organized. Statements supported with solid data. Management experience, a resume would be great, because we need to know how well experienced are you in the industry, especially if it's a startup. And the key individuals that's involved in the organization, such as your management team. If you're going to have someone manage or an assistant manager, put that information in, because those are things that we do measure with your business on the management piece and the experience. Next. Sources and uses of the funds. We need to know, again, what the sources and the uses of your funds are. And what will the funds be used for? Is this business injecting in this capital? Meaning that, are you putting money in this business that you're putting in because you can get credit for that? Note, 100% financing is usually not an option. The borrower should have at least 20% of his or her funds and cash reserves. Next. Review of the projections. Pay very close attention to this program, because what happens is we're going to ask you for the projections, and if you're not sure how to do them, there are programs out there that can help you do the projections and how to prepare for your projections. And seek professional assistance when necessary. If borrower does not understand these projections, the lender will not too. So you may seek professional help in getting this done for you. So I'm going to now turn it over to Miguel, who is going to go over the 5 C's of credit.
Thank you, Denise. And guys, everything that you've heard so far from Denise, it's been years and years of experience dealing with different loans applications, with different businesses, with different clients. We focus at Customers Bank in the small business world. So we want to help you and your business grow. So everything that she's mentioned about being prepared, explaining, being organized, we want to help you obtain a loan. It's not like we don't want to know. A lot of people, there is a misconception from the world out there that says, yeah, it's very tough to get a loan. You want to obtain a loan as much as we want to lend you money. We're in this business, but we need you to help us present a application, and we need to be organized. It's very important for you to talk with your lender all the time about your projections and what you're trying to obtain and what your goals are, and be ready as that. With that being said, everything that Denise has mentioned summarizes in the famous 5 C's of credit. You probably heard all the time, read about it. And those are 5 simple words that we as bankers look at when we're trying to approve or not a loan application. simple, the 5 C's of credit are character, collateral, capacity, conditions, and capital. I'm gonna go over this in really few detail, and you will be able to kind of understand what we're exactly looking for. First one, so the character is basically what it says. We want to make sure that we're gonna get paid. If we're gonna lend you money, and I want you to know also, if somebody comes to me and asks me for money, what do I expect from the person? I expect for the person to pay me back, as promised. We're gonna give you terms, but we want to get paid as well. And how do we look at? We look at your character. So it measures the integrity of the borrower, and it analyzes if you have actually been able in the past to pay your credit. That's why it's very important, and it happens all the time with Hispanic owners, right? They don't get credit. They believe, because we're Hispanic, we believe that the less debt that we have, the best for us. It doesn't work in the U.S. In the U.S., you need to establish a history of credit. That you want to tell the bank that you obtained a loan before, you were in debt before, and that you're able to pay. You have that good character to pay back the loan. That's why we run your credit, right? And your credit is going to be a history of things. Okay, that person had a car loan in the past. He's been paying on time every month. That person has obtained a mortgage in the past. Look at what the person has. He has a credit card. He went to Best Buy. He bought a laptop with credit, and he's been making his payments all the time. The character of the person is very important, and the report that we get for the credit agencies is going to tell us that person really cares. That person he's not getting a bill like in the mail and saying, forget about it, I'm not going to pay it. That person really wants to pay his obligations. So that's important. Number 2, collateral. What is collateral? We want to make sure, so just in case you don't pay your loan, we need to obtain something as an exchange. Now, we're not looking for collateral, really. We don't want to get paid with your car. We don't want to get paid with your house. You probably see it all the time, home equity lines of credits, right? You go to a bank, you say, I need X amount of money, and the first thing that they're going to ask you is, do you have any collateral? Do you have a house? Do you have a building? Do you own the store where you have your bodega? We ask that, simple for a reason that we want to be sure that just in case something happens and you cannot afford your payments, we have something to take back. It pledges a secure financing. It's very tough now for people to obtain an unsecured loan. They don't exist kind of a lot in the small business world. We have a product of customers that we can do that, but it's not a thing that you will find all the time. We get phone calls, hey, I want to get $200,000 unsecured loan, meaning you don't have anything to pledge as collateral. It's not going to happen. So it is really important for you to look at your things of what you have, at your assets, and see, I'm going to be able to pledge that as an exchange for a loan. The 3rd C of the credit is capacity. Is the customer capable of paying the new loan and current obligations? This is very important, and I'm not going to get into the minutiae and the details, but this is where we look at the cash flow. This is where we look at your debt to income ratio. All the time you hear from your banker, your debt to income ratio, what's your cash flow? But what we basically is, can you afford a loan? Are you going to come to my bank? I'm going to give you a loan for $100,000 for your business, but do you make enough money in your business, and are you able to repay the loan? What's your loan capacity? What is that ratio, right? How much money do you own into, on your car payment or your house or your business loan or whatever, and how much money do you make? And based on that, okay, I'm gonna see if I can give you $100,000 that you're asking for. If your debt to income ratio doesn't work for the bank, meaning if you owed more money of what you make, then I might not be able to tell you, okay, yes, you're gonna be approved for $100,000, but maybe I can give you $50,000 because your debt to income ratio works what we're looking for from you. So the capacity is really important. That is why a lot of people say, and it is a tricky thing, because if you are a business, for example, that get a lot of cash, right? And maybe you don't claim on your taxes or something like that because you get cash. Then when you go into a bank, they're gonna look at your income. If your income is not sufficient to justify the amount of the loan that you're looking for, then I cannot do anything about it. And I get a lot of customers saying, well, no, I make a lot more of what I show. It's like, yeah, that's great, but it doesn't really matter because it's not like in the application, it's not real what you're really making. Yes, I believe you, but it's not on paper. So that is really, really important. Conditions, assessment of the borrower industry and overall economic conditions. This is very important nowadays, especially this year with a year of a pandemic. You probably see that the restaurant business have been affected. The entertainment industry has been affected. Hotels, swimming pools, and casinos and bars and discotheques. Retail spaces, office spaces, people working from home. All the stuff is what we look at. We look at the conditions of the market. We look at the conditions of your industry. So for example, if you are in the business of doing things online, okay, if you help people connect on Zoom, for example, if that's your business, you're an IT expert and you're very good with videos and you have a studio with computers, well, now is the day that your business is probably going to take over, because this year, everybody has been working from home. Everybody's doing IT technology, Zoom, webinars and all the stuff. So if I'm not very good at it and I'm going to hire your business to kind of handle my platform, well, that's a good business to be in, right? But if you are, for example, a hotel, or your business is struggling just because of the economy or just because of a pandemic, for example, that's going to be a little tough. So we looked at everything. We look at the conditions of it, okay? And finally, capital, it measures the relationship between debt and equity. As I said earlier, we want to look how much skin in the game you're going to put in. So Denise was saying, we're not going to finance 100%. 100% finance doesn't work anymore. We get calls all the time saying, I have a bodega, right? I have a bodega, mixed-use property, for example. We love to do mixed-use properties. Somebody has a bodega on the first floor. They've been renting the space for years. The owner of the building has apartments on top, so it's mixed-use property. It has an apartment on top. It has a bodega on the first floor, so we call it mixed-use property. So then the owner of the business of the bodega will come to us and say, hey, Denise, Miguel, I want to buy that building where I'm in right now. That owner is actually, he said that he could tell it to me. Okay, how much is the purchase price? $150,000. That's great. How much money do you need? $150,000. It's not gonna happen. The banks are not gonna give you $150,000, meaning 100% financing. So you need to put a little bit of skin in the game. We're gonna ask you to put at least 20% down. That tells us that you're really into the business, okay? So if we're gonna measure the debt, the difference between your debt and the equity of your business, we wanna look what other assets you also have. If your business has a truck, if your business has a car, or you have other stores, we want to look at your whole financial picture, because at the end of the day, like remember, as I said at the beginning, we want to lend you money. Our job is to support small businesses with the chamber, to support you, to make your business grow. We're here for you, but you also need to understand at the end of the day, if we're going to lend you money, we need to get paid, and we need to make a smart decision about, would I lend him money? If this was my money, if my money was in my pocket, and Jael comes now and tells me, Miguel, I need $20,000, do I believe that Jael will pay me back, right? So we looked at that financial, okay, let me look at Yael, her character, her credit, her capacity, her condition, her capital, all the conditions that I just went through. And then I'll make a smart decision. Yes, she's worthy of me giving her the money she's asking me for. Look at everything I just went through. She is good. She's gonna pay me back. I'm gonna give her terms and whatever. So I don't know. That's all for me. The lenders can be a valuable resource. So please, you can consult with a lender. They can walk you through the process. Be in touch. Be in touch. We have great stories. Like actually, Denise, we're talking. Denise has a great story, like many great stories of businesses that a year ago they were speaking with her. Hey, Denise, I want your help. I need help. I need money. We're not gonna say yes all the time. We're not gonna, we're not in this business of saying yes all the time. But we are in the business of being a consultant. We are a small local community bank here at customers. So we look at our individuals, our customers, as individuals. And my role and the role of the multicultural team is to work with you and see, okay, Mr. Customer, if I cannot help you right now, I'm gonna tell you why I cannot help you. These are the issues that you need to work on. And I'm not gonna abandon you and say, okay, you're on your own now, you go figure out. My role and our role is to walk you through and help you as much as we can to go through the hurdles, to go through, okay, these are the issues, this is why we cannot give you the money right now, but I'm gonna help you through work through these issues. And we have great success stories of helping people a year later, 8 months later, saying, okay, now I'm able to help you because I walked through this with you. I understand where you come from. I understand where you're going, for, and then we're able to help you. So be in touch with your lender. Any bank should be able to help you out with that. Of course, we will love you to work with us, but any bank should be able to help you with that.
Okay.
Well, thank you very much.
And yes, Karen.
No, Miguel and Denise, I want to thank you. And in the 4 or 5 minutes that we have remaining, I think there's some questions that that have come up. So let me ask a few of these that are being addressed, and that is, what are some of the biggest errors that you see from those folks who are coming in for the very first time to meet you and to request funding?
Well, the biggest error, again, is not being prepared with having their tax returns or not reporting the income that should be reported on the tax returns. As Miguel said, if we don't report it, it doesn't count. And that's a big error. So just make sure if you're filing taxes for your business, please report it.
Okay. And Miguel, you have wonderfully addressed that issue before. And I'm wondering if you can also address it as Denise did, and that is, from a cultural perspective, one of the important things is exactly what Denise said, and that is, when you make the income, let's report it because it becomes important as you move forward and want to get some additional funding. What are some of the things that you've seen, Miguel, where you were able to coax, somebody from, I don't want to say not reporting, but being more of a full disclosure so that they were able to get the loan?
Sure, there is always a cultural issue, right, Karen, here. So, and it is a hard line to kind of look at, because it's right. If you report more money, you could actually owe money into the IRS, and then you have to pay that, right? So if I'm a business owner, I'm really look at it as like, okay, if I reported the money I make, I'm gonna end up actually writing a big check. I wanna get money back, right? So where do you cross the line? But you also have to think, but my big picture, my vision is to increase my business, is maybe now have one business, one restaurant, one store, and then open another location. So that's your big picture. Sometimes we want to save a couple $100 right here, but we don't see that, oh, I could be losing a big amount of money if in the near future I'm going to walk into Customers Bank and I'm going to tell them, hey, I want to buy a location right now. They're going to look at that, and then you're going to kind of hurt yourself. Yes, you saved a few $100 last year, but now I cannot give you the loan. And if you look at your projection, is I would have been making more money of the money I tried to save. So we talk to them all the time and say, listen, this is okay. You can report, you know, like you can make the sacrifice. And it's an education topic, right? So you need to talk to them all the time. And also, you know, I just wanted to add that misconception that we love to look at our phones, to look at the credit score that we have on our phones. The credit score that you see on your phones is not the same score that you're gonna get from a bank. So not because your phone says that you are 600 credit score or maybe 800 credit score, it doesn't mean that is the real score. I get screenshots of people, look, I wish I could apply for a loan, but look at my credit score that I have on my phone. It's 600. I said to them, let us run the credit. We use the same ages, but that's a real credit report. And you will be surprised at how many times it doesn't match what they have on their phone.
You know, what's interesting, Miguel and Denise, is when we're talking about that, you know, the establishment of a credit history, again, is so critical, okay? What would you advise the community to do if they haven't already started to establish a credit history that you folks would utilize in a loan moving forward? How would they do that?
It's, go ahead, Denise, go ahead.
Well, basically what I would suggest that they do is, number one, always, it's okay to have those phones ones, but like he said, it's not always a real one. But I would make sure that you pay your bills on time or ahead of time. That's very, very important, because what can happen is if you're showing up 30 days late, that can hurt you. So the first thing you want to do is pay everything on time, and that builds your credit score up. So, and another thing is, do not continue to shop. If you continue to shop for credit all the time, you can pull your credit score down. So be very careful with doing that. Don't let everyone run your credit score, because it pulls it down and that can hurt you.
If I use a debit card versus a credit card, does that help my credit score?
No, because using a debit card does not report to the credit industry.
Right, and you know what, I asked that, Denise and Miguel, as you know, okay, because a lot of people think that the use of a debit card is also a positive thing from a credit score perspective. So the answer is, a debit card does not help you on a credit score at all.
Well, remember, remember why are we doing this? We as bankers want to know we're going to get paid, right? That's we're gonna get paid. So how do you prove that? You borrow money, and then you pay the money that you borrow. A debit card is your money. It's money that you have in your checking account, right? That's, you're not borrowing anything. You're using your own money.
That's right.
When you use a credit card, you're borrowing money that is not yours from the bank that gave you the credit card, right? So I will also advise people, be very careful when you are helping a friend and you say, you know what, I have a friend that he cannot qualify for a loan, so I'm gonna co-sign for the person. You will show up, it will show up as debt, right? So now when you're coming, then you say, that auto is not mine. I didn't have a car loan. Yeah, you signed it, for your friend, for your cousin, but you co-signed, so it really shows as debt for you. So think about your future plan. Think about what your vision is for your business and what you're going to try to accomplish before you try to help somebody. I'm not saying don't help anybody, but be sure that that is eventually going to affect you.
Great. Let me just ask one other question in the last minute that we have here. Miguel and Denise, how can people get in touch with you in the immediate future when they're going to need a loan? What's the best way for our members and the community at large to contact you at Customers Bank?
Sure. So as you mentioned earlier, we are a member here with Customers Bank of the Hispanic Philadelphia Chamber. We're really proud to be a sponsor, and we have been a sponsor for the past years. we have a multicultural banking division at Customers Bank. And what the multicultural banking division does is a few things. We help minority business enterprises help to actually grow their business. So we work with the multicultural markets, the African American community, the Hispanic community, the Asian, the Indian community. And we also focused on the small business loans. So any loan below $1 million, our team will handle that. We have a great group of people, experienced lenders in Philly. Denise is one of them. Her office, she's gonna tell you what her office is, her phone number, but you can also go on our website and find Multicultural Banking. You can look us up on LinkedIn, or we can also please go to the Hispanic Chamber and tell them that you wanna get in touch with us, and they will be happy to connect them. We've been receiving great emails from you, Kieran, connecting us with people. We have been able to help them.
I'm so happy. Denise, I'm going to allow you to have the last, 15 or 20 seconds here. Tell people how they can, get in touch with you and really start the process and, get mentored and get ready and get their money. Denise?
Sure. I'm located in Philadelphia, 1501 North Broad Street, right off of Temple University campus in the Sullivan Center. It's where Fresh Grocery is. It's a big plaza. You can't miss me. And if you need to get in touch with me, you can call me at my office at 215-717-7958. So I would be more than happy to have a conversation with you and guide you and walk you through the process.
Miguel Alban, Denise Payne, Customers Bank, we thank you so much for taking the time to give us your time today to really help the community understand the critical importance of being loan ready and what needs to be done in order to do that. We thank you for your time, and we remind people that we are in the midst of our Dine Latino Restaurant Week until October the 4th. So please make sure that you support that. We have our new member orientation coming up on October the 29th. So if you haven't already attended one of those or would like to know what's happening in the future, make sure that you go on our website and register. And coming up on November 16th through 19th with, information coming very soon. Mark your calendars, folks, for our Young Professional Network Professional Development Conference, always one of the biggest signature events of our year. Denise, Miguel, again, thank you so much. We thank La Mega for being a sponsor of our Resolve It in 30 series. Everyone have a nice weekend, stay safe, and thanks for your participation.